lows for the day right now. S&P, remember, is down 4 days in a row. It was a mixed open, a little more declining than advancing stocks. So let me show you the sectors. At the open, tech was doing a little better. It's been a rough 4 days for tech. Energy is oil has bounced a little bit today, but major global industrials generally are down. This is true over in Europe. We also saw automotive stocks down in Europe again today, and particular weakness in materials sector. And that's because I think the most important story of the day is PPG. Just take a look at what they said. PPG makes coatings. They make coatings for the automotive industry, for boats, for the aerospace industry. They talk about rising raw material costs. And of course, the implication here is they have less pricing power than they used to. They talked about weaker demand, not only in China, but automotive in general. They have a lot of customers that have high inventory levels due to lower demand. And then they have currency pressures. So you got a little trifecta going here. Some are arguing that this sounds a little bit like stagflation, you know, higher inflation, weaker demand, but the economy is really strong. So I'm not sure I buy into that particular argument, but you can see it's moving down. That's a big material name, and it's moving down other names in the material sector. PPG's essentially gone nowhere this year. It's notably to the downside. Elsewhere, the world's changing. In the last 4 or 5 days, we've been discussing this and what's been going on here. We have, remember, the last 10 years, the story has been low growth. And what do? You buy growth. You buy technology stocks. And you have low yield. So what do you do with that? Well, you buy high dividend yielding stocks. Now the world is changing a little bit. Started changing in February when rates started moving up, and now it's been changing in the last week or so. So you have a different environment overall here. You have higher growth, and you want to do higher yield as well. So what do you do when you have higher growth and higher yield? Suddenly, treasury stocks, treasury bonds become more attractive versus stocks. That's the number one story. We've been seeing that play out in the last 4 or 5 days. And now the interesting question is, well, what do you do about growth? Do value stocks, some like consumer staples, for example, do they become more attractive over growth stocks? They have been losing for 10 years generally over growth, but maybe the tide is changing. Maybe some inflection point has finally been hit. We don't know, but that's the kind of thing that's being debated right now. Another thing that's being debated is, what exactly should yield investors be doing? You know what we've been telling you about for a long, long time. And we've been seeing some declines there. I just want to show you what the FANG stocks are doing, for example. They've had a tough time in the last 5 days. So here's that classic growth story. These are the growth names. And you see what the impact has had when suddenly growth becomes a little more attractive. The main growth names get hit. A lot of them have, frankly, not been doing much for the last several months, and particularly down today here. I just want to move on and talk about that yield investor. What does the yield investor do right now? There's a lot more choices. It's a little more confusing than it used to be. So suddenly treasuries were never attractive. Nobody wanted them. Now they're a little more attractive. Now they're getting some attention. You hear about old women talking about higher CD rates than they ever had before. My mother mentioned this to me the other day. Then you have the traditional things. Investors went into REITs and consumer staples. Higher yields there. They're a little less attractive historically, but the economy is strong. So why would you sell consumer staples and REITs if the economy is still really strong? They'll get some growth there still, even with rates a bit higher. The other big question is high yield. Everybody bought high yield. Does that still work? Well, maybe. The credit cycle is still strong, and we've got a very low default risk. So it's a little confusing for the high yield investor right now. There's a lot of choices. There's a lot of choices for traditional stock market investors right now. The world is changing. Right now, wealth, we're sitting right at the lows for the day. Dow's down 140 points. Back to you.